All right, welcome everyone. My name is Nick Hershey, president of the Mortgage Calculator. We are a lender and broker licensed in over 20 states. And we love to offer all kinds of different loan types, but we definitely specialize in unique loans. And what we do here every day, we check out the markets in general, check out our standard rate options for our standard programs, and then we'll do a deep dive into something that is unique. And today is definitely one of those days. We have our 5 to 9 unit DSCR loans. So these are for properties that would traditionally be a commercial property. Anything over 4 units is going to be commercial. However, this allows us to do these small commercial properties as a standard DSCR loan. So definitely a great option for our investors out there looking to get into those small apartment buildings, essentially. So let me go ahead and switch my screen and we'll check out the rate options for today. If you'd like a full loan estimate, full breakdown of any of these options, please drop a comment, visit our website, or any one of our 200 plus loan officers would be happy to help you out. And usually what we want to check out when we're talking about the markets here is going to be the 10-year treasury. That's going to be one of the best indicators of rates overall when we're talking about different programs. And here you can see definitely with a lot of the news this week, some increase in the 10-year yield overall. We did have a lot of good news recently, as it has been on the way down. So when we pull this back to 1 year instead of just 5 days, we can see we are still at 1 year and in some cases 3-year lows. And we were at some of the lowest rates we've had in a long time just the other day. Either way, still a great time to be out there shopping in the markets, as the affordability has definitely gone up. But let's check out what that means here with our live rates. So this is our live rate page. Let me zoom in a touch. This is where we can compare our standard rate options for our standard programs across a single scenario. So we set up a nice, easy 1 unit single family home, 500,000 purchase price, 300,000 loan amount. That corresponds to 60% loan to value, 760 estimated credit score, and 40% estimated debt to income ratio. That way we can see the lowest rate options for all the different programs across the board. So first up, our conventional options for a primary home, 30-year fixed, standard mortgage loan. What you think of when you think of a mortgage? Coming in today, rates as low as 5.75. Final APR there, back up over 6 at 6.008. Definitely love to see that as it was down over the last couple of days, but has not gone up that much. And our FHA options, we were almost getting into the 4s, but now today looks like a rate as low as 5.25. And remember, FHA does allow more leniency. However, it does have upfront and yearly mortgage insurance. So when you look at the APR there, 6.171, even though it has a lower rate, the final APR there is definitely higher, 6.171. And for our VA eligible borrowers, the VA programs are typically some of the most amazing options. VA comes in today, 5.25 rate as the lowest rate option. Final APR there, 5.5%. And notice when you compare that across the other options, definitely the lowest APR. So typically the best option for our VA borrower and much lower fees than FHA, etc. And we have our USD option coming up here. It was in the 4s. Now it's back up to 5 exactly, 5.00. Those are for properties in USDA eligible areas. Those are the rural areas of the country. And the final APR there, 5.663. So if our customer is looking in one of those areas that are USDA eligible and they are their income is eligible, you can see here it is a lower APR than FHA or conventional if you're comparing across. So typically the best option for those borrowers. And next up is our non-QM options. So those are some of our favorite options here at the Mortgage Calculator, where we can use alternative docs, especially helpful for our self-employed borrowers here. So if they don't qualify for conventional FHA or anything standard, we can flip to alternative docs for a primary home here, use bank statements, 1099s, etc. And rates today come in as low as 6% flat, final APR at 6.272. So it is a little bit closer there to conventional, as the conventional has gone up a touch, but non-QM doesn't really change on a day-to-day basis, usually once a week or so. And our non-QM alt doc options for investment properties comes in as low as 6.125 rate, final APR 6.448, about the same as it's been the last week. And we can compare that to conventional for investment property, rates as low as 6.125, same there, final APR 6.438, almost identical. And here's another change, definitely one we don't like to see. Our DSCR loans, some of our favorite options here. No income or employment needed. Simply use the estimated rents for the rental property to determine a DSCR ratio. If the rents cover the expenses, aka the property cash flows, that's a DSCR ratio over 1, which is what we set for these demos. And this one has a 3-year prepay, rates as low as 6%. Just the other day, they were 5.875, so have gone up a touch, just one tick up. Final APR there, 6.175, still better than conventional or alt doc options for our investors there. So it's absolutely amazing that DSCR is still beating conventional. And we can add a 5-year prepay there. Definitely see a little difference. As you can see, the rates as low as 5.875, goes down a little bit with the 5-year prepayment penalty there. And final APR 6.120, smoking conventional and our alt doc options. So usually our preferred option for our investors. And we have an option with no prepayment penalty, of course, for some states that don't allow or some investors that do not prefer. 6.125 rate, final APR 6.448. And we have a ton of other options: second mortgages, HELOCs, fix and flip, one-time close, all kinds of options here if you scroll down on our live rates page. And again, if you'd like a full loan estimate, please request it there on our website. One of our team members will get that to you. But let's go into our deep dive example today. We're going to be talking about a DSCR loan. So one of these nice, easy investor loans for our what would be considered a commercial property here. So obviously with this demo, with the very low rates here is for a standard 1-unit single family home. So the rates are going to be a little bit higher, but definitely not as high as the commercial. So this is kind of a hybrid program right in between the standard DSCR and the commercial, the true commercial. So first off, let's identify a property. So I went to LoopNet here to find a property just near me that we would need to use this program. So this is a 7-unit apartment building here for $2.1 million here at 825 Northeast 6th Street here in my nearby area, just the first one that popped up. So this is a great example here. So obviously a regular DSCR loan or obviously any conventional loan would not work for a 7-unit apartment building. However, we have our 5 to 9 units. So this is for a very small residential, right? This is only residential. There's no mixed use. Very small residential multi-unit property. So a 5 to 9 unit apartment building. So this 7-unit is perfect. So a couple things to consider here. Let me pull up the first quote that I have. So this is a purchase, the lowest down payment. So instead of the standard option, we can go as low as 15% down for a single family home, and even sometimes a multi-unit home for our standard DSCR. Our multi-unit here, our 7-unit, 5 to 9 unit program allows as low as 25% down. And for this quote, we set a 5-year prepayment penalty to show us the best rate options. But this is for that exact apartment complex you just saw. And some of the benefits here is that it utilizes the standard DSCR guidelines. So oftentimes when we go to a commercial property, our commercial options will require the metro area to have a certain size, the rents to have a certain setup, and they underwrite it differently, not as a standard DSCR loan. It is a commercial loan, which has different underwriting guidelines. This is very simple. Do the rents cover the estimated PITIA expenses? And obviously, commercial loans are going to have higher rates and costs. And most importantly, a true commercial loan is going to probably restrict the LTV anymore. Most commercial loans require 30% down. So again, this is another sweet spot for our little small residential multifamily DSCR option. Another thing to consider, I set the DSCR value of 1.25 here on this example, and this program requires a minimum of DSCR of 1.15. So the property not only has to cash flow, it has to cash flow pretty significantly there, because it is a large property, typically not an issue there when we have our customers come in requesting this. And again, we added a 5-year prepayment penalty to show the best rates and costs, but let's get into it. So lowest rate option here for 25% down on what would be considered a commercial property, 7.25 rate, which is much lower than the standard commercial rate. That costs 3.475 discount points of cost, so a little hefty cost there. But we have some reasonable options here. 8.25 rate has just a 0.85 cost there for discount points. And again, this is a very preferred option here. 25% down payment is what we have set up here. 75% loan to value for business purpose loan. And the other settings we have is the 5-year prepay. And remember, we set that estimated FICO score of 760, the same as all of our other demos. So this is a great option for our investors looking to purchase those small multifamily properties. Now, if our investor, in this case, they listed this property for sale, but maybe they just needed some cash out. So we can also quote it as a cash out. Of course, it is listed for sale. But if the borrower wanted to get a cash out before they listed it, this would be the scenario. So we can go as high as 70% loan to value for a cash out refinance. If there's no cash out or rate and term, we can do 75 LTV. I did not quote that, but just know that is the limit there. So 70% LTV here for a cash out. We have a 5-year prepayment penalty on this one, and all the other options here are pretty much the same. It does require a minimum of 1.15, but we did set a 1.25 here to get some of the best pricing options. So lowest rate option, pretty similar here, 7.25 rate, costs 3.225 discount points at cost. And we do have an 8.5% rate. Has a par cost here of 0, so no discount point in cost. And again, this is to get 70% cash out on our 7-unit multifamily property. And the couple settings there, remember 70% LTV, 5-year prepayment, 760 FICO credit score. So these are amazing options for our investors out there that are looking to get into the multifamily space and not looking to do anything too large. This is a great option for those small multifamily properties to be considered as a standard DSCR. So hopefully that helps some of our investors out there. Again, if you'd like a full quote on any of these options, please drop a comment, go to our website. We'd be happy to help you out. And other than that, we'll see everybody here later this week as we pull up another episode of Daily Rates. And hopefully we see rates improve overall. Have a great day, everybody, and good luck out there shopping for homes.